Good morning, everyone, and welcome to Morning Markets from True Potential. Today, we'll look back at how asset markets performed last week and take a look at the week ahead and some of the key data points that we'll be looking forward to discussing, primarily focused around central bank activity this week. So just looking at asset markets last week, yes, it's certainly been a slightly more volatile journey in terms of the magnitude of the up and down days over the past 7 days, but we have seen, taking that all into account, a number of equity markets continue to reach all-time highs over the course of the week. And that very much speaks to that ongoing rotation that we've been seeing within asset markets and that move towards the more cyclical or economically sensitive areas of the market. And we've really seen that through the course of last week and indeed again on Friday. The real, I think, differentiating factor last week was around just in the initial stability that we did see in sovereign bond yields after what we had been a much more volatile journey over the past number of weeks during February, where we saw those sovereign bond yields move out quite considerably. Bit of stability at the start of the week. That gave a little bit of a respite to some of those areas of the market that have been more challenged by higher bond yields. But then on Friday, we did see a return to that movement with both the US and UK 10-year gilts, 10-year sovereign bond market stepping out on Friday. And I'll come on and we'll look at that in a little bit more detail in a moment or two. I think the other things just to reflect on from last week, particularly some of the economic data that we saw from the US around inflation not being as strong, maybe as has been anticipated, but also then we saw a much better initial jobless number as well. And that continues to point to the ongoing improvement that we are seeing in economic statistics, but also economic momentum in the US. And that was, I think, very much borne out when we look at the University of Michigan survey that just looks at consumer sentiment. And that really did continue to improve, coming in at 83 on the day. The other thing last week in the US, and important from a global markets perspective, was the approval of the 1.9 trillion fiscal support package. And we'll then see the support payments from that, some $1,400 coming out over the coming weeks. And the key thing there from an economic activity perspective will be to look and see how much of that money is spent versus how much of it is saved, and how that then feeds into economic activity over the course of the year. Just looking at some of the treasury market really, and what did we see there on Friday, and this really spoke to a bit of the rotation then that we did see in equity market performance on Friday. The much sort of stronger move out in sovereign bond yields. So the 10-year in the US back above 160, I think it closed around 162 on the day, so out that 10 basis points on Friday. And we've also seen the 30-year move out as well, hitting some of the highest levels that we've seen in the past 12 months. And that steepening of the yield curve continues to support those areas of the market more sensitive to economic recovery, particularly the financial sector. And that's one of the better performing sectors over the course of the month to date as well. The other story last week was really about the action that we saw from the ECB and the extension of their bond purchasing program. And that did have the effect of sort of capping off that move out that we've seen in sovereign bond yields in Europe. And you can see that in the following three charts. And what we've just done here is we've used the German 10-year Bund as a proxy for Europe, and then we've just compared it with the US and also the UK. And what you can see there is really that stability or slight coming in rates that we've seen within Europe. But then if you contrast that with the performance and the shape of those curves in the US and the UK, you can see those curves continuing to move out. And then as a result, we're continuing to see the overall yield curve environment steepen in the UK and in the US. Just at one other point from Friday I wanted to comment on, it's made a lot of attention in the papers over the weekend, was just the trade data for the UK, looking at exports and imports to Europe for the month of January. What did we see there? We saw that there was a fall of some 40% in exports. I think really the thing there that we have to wait and see is we need to see how the data evolves over the coming months before we can really make a judgment on the impact. There's a number of factors, a transition period, everything working its way through that we need to just see before commenting in any more detail on the true impact that we're seeing from a trade perspective. Just then, looking to the week ahead, really a lot of central bank activity this week will be at the forefront of market participants' thoughts. We hear from the Federal Reserve, we hear from the Bank of England, we hear from the Bank of Japan. All of those indicators that they will be discussing will be really important. I don't think there'll be many changes to policy at all. I think it'll be much more around the nuance of the discussion at the press conferences, which will be the focus of market attention, and whether, like we saw from the ECB last week, there is any further action that may or may not be taken to stem that rise in sovereign bond yields that we've seen. So that'll be a particular market focus over the course of this week. I think then just looking at overnight in Asia, we had a lot of Chinese economic data in terms of retail sales, industrial production coming through for the first 2 months of the year. And that's to really adjust for the variability that comes from the Chinese New Year. Now, what do we have? We have exceptionally strong numbers, industrial production up some 35% year on year. But really keep in mind, that's a function of the really low base effects that we have from the impact of COVID-19 in China at this time last year. So not a lot can be inferred from those strong data points. It's much more about looking at the month-on-month evolution of data at this point in time, just giving that year-on-year distortion that we'll see. I'll leave it there. Please do subscribe on our YouTube channel, and I look forward to speaking to you again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.